Pop everybody, welcome to another video. And yes, I am still in the car. This has been a 4.5 hour ride. So I decided to pick the camera back up again. But as y'all can see, I'm in the process of moving. So that's why the car is a little packed. So ignore the extra noise and focus on what I got to tell you. Today, I want to talk to you guys about what kept me unprofitable for so long and how you can fix that. I think just to give you all a brief rundown, I started day trading specifically my senior year of high school. I traded crypto since I was like 16. My uncle opened an account for me. I traded crypto through him. I would give him money and he would deposit it for me and I would manage it through there. That's besides the point. Day trading specifically, senior year of high school, I started out um, just looking for another way to make money. And I started out trading options on Robinhood. Now, these options that I traded on Robinhood was like, I traded with like $200-300. I flipped it to like 800. Ended up losing it all. Ended up taking a break until probably for like 2 months, picked it back up. And that's where I discovered I was trading with indicators at first. I found I was still trading the options, but I was doing more technical analysis. When I was trading before, it was no technical analysis. It was literally just pure luck. Like literally pure luck. I would press some buttons and end up making some money somehow, some way. But once I picked up the charts, I strategy hopped a little bit. That was the first thing. I didn't really have a set system in place, and I jumped right into the deep end. I didn't demo trade. No, I did. I demo traded for literally like 2 days. 2 days of demo trading, like literally, like I made one, winning play. I bought some calls and I made like $1,000 demo trading. And from there, I was like, I'm good. I'm ready to go. Let's get it. I jumped right in the deep end. First big red flag. First mistake I would not recommend you do. And this is tied to greed. This is tied to me wanting to make money. Keep that in mind. So I jumped into the deep end. I'm trading the options using indicators at the time. Lux algo indicators off of TikTok. If you know, you know. I was using one of their little band indicators. And from there, I went to Bollinger Bands. And then I discovered TJR, who trades ICT concepts. If y'all know who that is, I'm sure most of y'all do. But once I discovered him, he had the boot camp, and I went all in with ICT concepts probably like 4 months into my journey. So it's 4 months of like other stuff, and then I switched to ICT concepts, and then I've been doing that ever since. So for like probably 2 years and like 7, 8 months to this day. But the first thing, like I said, was just that I was strategy hopping. I was trading with indicators, stuff that really didn't even make sense, that had no actual contextual bias behind what it was doing, at least to me. I didn't understand why the robot or indicator would say buyer, so I'll just follow. That's the first thing I would say that delayed my process. If I would have just, obviously hopped right into learning an actual system, an actual strategy without trying to rely on indicators, that would have saved me a lot of time. Now, obviously, I had to go through that. I needed those losses, those lessons in order to get to where I am today, but that's something I would not recommend. I would recommend learning an actual system. Do not rely on indicators. Do not rely on anybody else. Don't try to take, call outs or signals from anyone. Get it out. Get it on your own. Get out the muscle. It's going to be way more lucrative. It's going to taste way more sweet when you know that you actually earn what you work for. Number two, just my constant fixation on large numbers. Now, once I started trading ICT, I was still in options. And with these options, long story short, I was full porting. I was full porting options for a good month. Made about $7,000 to $8,000 that I lost. I had zero risk management at all. I had no real understanding of what risk management was or what it should have been. And that was another red flag. I didn't do my full due diligence how I should have before I jumped in. This is another thing that kind of kept me stagnant for a long time. I didn't actually develop a proper and true risk management plan till I was literally like 6 months in, and I was still losing. And yeah, so from there, I kind of switched out of options once I blew all that money, and I discovered Forex trading because that's what for TJR trading. So I decided to hop into Forex, and I started Forex trading prop firms through there, CFD firms. My mistake with those firms is that I was buying the max allocation accounts. So I'm spending thousands of dollars. If you know how much those firms cost, 100K prop firm account on the CFD firm would be like $500. So I'm spending all of this money when I'm actually not even ready for it. I didn't even try to just dip my toe in to get my feet wet and just buy like a 25 or a 50K account. I was trying to rush through process and make the money fast. Another attachment to money. So yeah, that was the next step where I feel like I was just making mistakes. No proper risk management at first, and then from there I was just over my head. I was too confident in myself. I didn't collect enough data, and I wasn't actually willing to be patient with myself. I was trying to jump right in to making 10, 20, 30K a month without even hitting my first $1,000 or $5,000 a month. I was being impatient. Once I kind of ran through a bunch of Forex firms, I ended up passing my first challenge maybe, I think, August or September of my freshman year of college. So I'm going into my junior year now, so about a year and a half ago, I think that makes sense. A little bit into my freshman year of college, I passed my first Forex prop firm account. I spent $1,000. It was a $999 account. It was for 200K. And I was trading through MetaTrader. And with MetaTrader, if you guys know any history behind that, it ended up getting banned in the US. So all these CFD firms were banned from using MetaTrader once I passed my account, literally. So MetaTrader was banned. This is where I ended up rerouting to futures, because I didn't want to keep going through all the issues. I was seeing a lot of people saying MetaTrader is probably not going to come back if you're in the US. So I was like, all right, let's switch to futures now. Let's see how this goes. And I always kind of was hesitant on trading futures because of the fact that mainly I had to look at two charts. I did not want to have to worry about two different charts trading ES and NQ futures specifically. I didn't like the idea of having to worry about divergences, and it just seemed too complicated to me. So I never wanted to do it. But I was kind of forced to. God forced my hand to do that. I ducked it for a long time, but I hopped into it. And then from here, one of the biggest things I think that delayed my process once I started trading futures was me just, first of all, it boils back down to kind of what my issue is with the Forex firms. I'm buying these super large accounts, not really even have passed one account. I'm trying to rush my process, trying to get to the money quick. That's the first thing. The second thing, I was still learning. I was still new to trading on two different charts, ES and NQ, having to worry about divergences, and I was very fixated on that. And then I was also fixated on the lower time frame. I stuck to the lower time frame without actually having a high time frame contextual bias. And I think this is another thing that mistaken me as well, especially when trading futures, worrying about ES and NQ, learning the divergences, learning how the two works. I was too fixated on the internal time frame. Zoom out. Zoom out is what I would tell myself. Zoom out on the chart, zoom out in your life. Stop worrying about the internal time frame, stop worrying about the day-to-day. Worry about the week-to-week, the month-to-month, the year-to-year. And not even week-to-week, honestly, because you can have a bad week and still end the month perfectly great. In a great position. You can still end the month profitable if you have a bad week. So don't even worry about the week. Take it day by day. Really look at it from a higher time frame perspective, on and off the charts. And I would have been a lot better because I consistently would revenge trade. That was something that I would do a lot. I wouldn't be able to just walk away. I was a slave to the charts. Anytime I had, if I could trade Asia session, I'm going to trade it. If I could trade London, I'm going to trade it. If I'm awake, I was just trying to trade every session. I wasn't, kind of putting myself in certain lines and staying between those. I wasn't being disciplined on that part either. That's another thing I would say. Stick to one session. Specifically for me, I like to trade New York Open. Stick to that. Don't touch anything else. If you know that this is where you're most profitable at, stick to it. Another thing, I was not worried about my metrics at all. I was using TradeZilla. I was, tracking, I was journaling, but I wasn't actually using it to its full ability. I was mainly just using it as a calendar to track my P&L, which I could have did for free with Notion. I could have saved a lot of money with Notion. But I wasn't using it to its full potential. I wasn't actually studying my metrics. I wasn't actually studying my my performance data for a very long time, till about 2 years in probably. a year and a half, 2 years in, I was saying I wasn't actually studying my metrics. Once I started doing this, I understood so many key and underlying, just statistics that I had no idea about within my trading. That this unveiled, and this helped me a lot because I found out that I'm my most unprofitable pre-market. I'm most unprofitable in the first 5 minutes of market open. So from there, I just started implementing little things. All right, I'm not going to trade the first 5 minutes. If I do, it's going to be with a quarter size. Okay, I'm not going to trade pre-market. I'm going to wait till 940 opens up. I'm not going to do this. I'm not going to do that. This is all things I learned. I'm a better, I take better short trades than I do long. I'm going to start sizing in on longs or on shorts more and sizing down on longs because I know that I trade better shorts. It's just understanding your metrics and adapting to them. I didn't adapt for a very long time. This is another thing that postponed my success. Being attached to the money, being too zoomed in, not being disciplined, not sticking within my time frames, not staying within my criteria that I was set for myself. And then, yeah, that's like mainly it. I feel like just being disciplined, understanding what works for you and following that. And then, yeah, that's simply it. Like, you have to learn yourself. Experience in the market is key. That's the number one thing. It's the number one thing that's going to help you out. Experience in the market, learning yourself, staying disciplined, know what works for you, know what doesn't. Stay zoomed out. I promise you will get there. Yeah, I'm going to catch you on the next one, though. Keep it short and sweet. That's about it, I think. If I have another one, I might make a part 2 of this if y'all like this. But yeah, I'm going to catch you on the next one, though. Please leave a like, comment, subscribe. Catch you on the next one. Peace out.